it. I'll give everybody a few minutes to join before we get started. Got 22 in now. I'll give it until 3 minutes past and we'll see who we've got on.
Quick chance to get a cup of tea.
Yeah.
We've got a few people coming in, but first of all, hello everyone and welcome to our Food and Drink Heroes webinar with Seedrs. In today's session, Head of Partnerships at Seedrs, Emily Fitch-Deeley, will be joined by founder Zoey Henderson to discuss how to get funding for your SMB business. They will look into what and what not to do when raising investment for your food and drink business, with practical advice on how to run a successful crowdfunding campaign with Seedrs, the leading equity platform for SMB raisers. There is an opportunity to ask questions during this session. If you have a question you'd like to ask, you can pop this in the Q&A function at the bottom of your screen, and we'll do our best to answer these later on in the session. And with that, I'll pass over to our host today, Emily.
Hello, everybody. Thanks so much for joining us on this not so sunny morning. Well, not so sunny where I am in York. Zoe, is it sunny in Wales today?
It's not, so it's a perfect day to be sat in front of my laptop.
Joining us on this fun morning. Yeah, so really excited to kind of have you all here today. We're going to chat about all the fun things around raising money, all the ups and downs of what's involved in that. I'm going to take you through a little bit around Seedrs and what we do here and generally what kind of equity crowdfunding is. And we are joined by the awesome Zoey from Fungtn. I'll kind of let her give a bit of a brief introduction to herself in a sec, but Zoey just recently raised with Seedrs with a very successful campaign, which is amazing. So I thought it would be awesome to have somebody on who's practically gone through a crowdfund with Seedrs to give her kind of truthful knowledge of kind of the what's and what nots to do when doing a raise. So Zoey, do you want to give a little intro to yourself?
Thanks, Emily. Yeah, so I'm Zoey, the founder of Functional Brew Company and alcohol-free craft beer brand Fungtn. So we are an adaptogenic alcohol-free craft beer brand. We brew with mushrooms, so we have a particularly unique USP. We're bringing in the worlds of health and wellness into adult occasion drinking, and hopefully scaling a brand that's going to kind of carve out a new niche within our growing market of no and low, which is a really exciting space. I launched the business in 2020 towards the end, self-funded, and so quite quickly I knew that I had to raise some capital, and I started looking at my fundraising journey towards the end of last year, and decided to bring together lots of disparate investors and different kind of pools of funding, and collate it all on the Seedrs platform.
Very successfully as well. Awesome. For those that don't know me and know my background, I also started, well, I've kind of been in the drinks industry my entire career, starting out like Pernod Ricard and being Brewdog, and then most recently started up my own drinks brand called Fitch, which is actually now recently changed to Here and Now as a new rebrand. But I've also kind of been on a fun funding journey with that. So we actually did a crowd round as well back in 2017 as our kind of seed stage when we were looking to, we were actually like pre-launch. So we hadn't actually done anything at that point. And we raised some money so that we could buy like our equipment and all that kind of stuff. So I do have kind of first-hand experience, as well as obviously now being at Seedrs, of what it kind of takes to do a crowd round, as well as kind of funding outside of that. So our journey's not just been with the crowd. We've done kind of other types of investment, and I will share a little bit of that as we go. But I'm just going to share my screen, and where we're at now, 6 minutes past, so I think we should just kind of get cracking. It's going to be kind of quite easy. I've got a bit of a presentation which I'll take everybody through, but I want it to kind of be a bit of an open chat. Really keen to kind of hear Zoe's experience as we go through as well. But please do, if anybody has any questions, just whack it in the comments box, and we'll kind of try and get to it either as we go through, or there'll be a kind of Q&A session at the end, which we can run through some of the questions. And then there'll also be our kind of contacts that Chloe, I think, is putting in the box. So please do connect with us on LinkedIn or drop us an email if anybody has any questions that you can think of throughout or afterwards. So I'm just going to share my screen. And then I'm get attacked by a fly. Alrighty, can everybody see that okay? Zoe, can you see it?
Yeah, looks good to me.
Perfect. All right, so how to get funding for your F&B business. As Chloe kind of mentioned, Seedrs is the kind of number one crowdfunding site for F&B businesses. We've done a shed load of them on our site, and they're all really successful. So it's great to kind of be here presenting to a bunch of F&B brands that hopefully are considering the crowd, because it is a really good way. And I'll explain why it's really good for F&B brands shortly. But just to give a basic overview of what is equity crowdfunding for those that don't know, it's essentially a process where a company raises finance from a wide range of investors in exchange for equity shares. So there's a few different types of ways to do kind of a crowd round. You've got obviously likes of kind of Kickstarter, which is more of a rewards-based platform where you're not giving away equity. But like the Seedrs, we are an equity-based one. So essentially, you'd set your valuation, depending on how much you're wanting to raise, you'd give away a certain percentage of equity in your business for that raise size. You can invest on Seedrs from anything from £10 up. So it's a really great way of bringing in essentially all of your consumers, your friends, your family, your network, everybody all under one roof to become kind of ambassadors of your business without them having to put in, hundreds of thousands of pounds. In terms of like different types of ways of raising, you've obviously got everything from kind of rewards-based crowdfunding to equity crowdfunding to debt financing to institutional VCs, angel networks. You've got government support. You've got different types of loans and grants. So there's a bunch of different ways that you can raise money, and it is very dependent on your stage, the type of business you are, and what really you have access to. If for kind of more of your institutional led rounds, you're probably needing to be a little bit further along than kind of seed stage, especially if you're kind of F&B. Is what I found anyway, that most institutional will only look at kind of F&B raises once they've got kind of significant traction. So really crowdfunding is an excellent option for when you're kind of anywhere from kind of seed to Series A. I would say it works really well. And I'll kind of chat a little bit around the real benefits and upsides of crowdfunding for an F&B business in a minute. But it really is a fantastic way to kind of, it democratizes, investment. The kind of crowdfunding all came about because there was kind of bank loans and kind of bank investing and institutional stuff got really difficult around 10 years ago. And Seedrs was really set up to enable, access to capital for a lot more businesses, which we have done. We've done over 1.9 billion worth of investment through our site to date, which is just incredible, the amount of businesses we've supported throughout the years. But you can, anybody can invest, and that's what's really great about it. And it really enables, really talented entrepreneurs like yourselves to get access to capital, which might not be that easy, especially if you don't have a little black book of angel investors or institutions. What's really interesting is that 1 in 3 seed stage companies actually choose crowdfunding. There's huge upsides to doing it, but it's like I mentioned, it's a lot more accessible for businesses than potentially going more kind of institutional, or even kind of your debt funding, your grant funding, loans, all that kind of stuff can also be quite difficult. So it is, I think, sometimes a more obvious choice for people, especially kind of seed stage, to do. Seedrs is the home of F&B. So I mentioned this before, but we're the market leader in it. We've done raises such as All Plants. This are actually back doing their second round with us currently. We've done Innocent Gun, Oddbox, Fungtn, obviously, and it's So it's a really great opportunity to kind of tap into our investor base, who there's clearly a want and need there for interest in kind of F&B businesses. What's interesting about Seedrs is that we actually have a really high rate for businesses, for investors, that are wanting to invest multiple times. So the fact that we've done a lot of F&B raises is a really positive thing for other F&B raisers coming onto the platform, because the investor base is there. So it means that we have interested people that are looking to invest into other F&B raisers. And I think that's why we've become the market leader in F&B. This is just a handful of the awesome businesses that we've raised for. So you can see that there's a lot of different types of businesses within that, a lot at different stages as well. So if you're coming at it from like a more seed point of view, we're happy to chat. We don't do raises less than 100,000. So anything from £100,000 up is what we look at. So it's really that kind of seed to Series A. Pre-seeders, probably more looking at your rewards-based crowdfunding or just a sole friends and family round. So a couple of key elements for success. I'll be dead keen to hear Zoe's thoughts on this in a minute as well. But the way we see it at Seedrs is that your money that you're looking to raise comes from 3 different tranches. So it's going to come from your own private network. So this is, your friends, your family, your personal networks, so likes of LinkedIn, and then also your business community. So especially if you're an F&B brand, you're in your trading already, you're going to have, consumers of your business. And this is what we talk about as being your business community. Anything from all your people on your social media to your newsletter database to all your consumers buying. These are people that are potentially interested in investing in your business. I know for a fact from when we did it with Fitch, one of the reasons we actually chose crowdfunding was so that we could have like a little army of ambassadors for the business. And this has really actually helped over the last kind of few years, being able to kind of tap into them and kind of utilize their kind of networks and their support and all that kind of stuff. So it's a really lovely way of bringing people on board to be part of your business without having just like one sole kind of VC maybe in there. You've got like multiple people with smaller shareholdings, and it can be really nice to do that at the start of a business. And then the last tranche is what we call, which is essentially our investors on our platform. We've got hundreds of thousands of investors. And like I mentioned, there's multiple F&B raises that's been done on our platform. So there is interest there from our investor base for F&B businesses. So if you essentially add all those 3 together, that is what we believe hits your 100% of your target. Like I said, your own network. This is like friends, your family, your professional network, friends of the business, anything you do in terms of events or moonshot investors, all that kind of stuff. That is your private network. Building your community. How do you kind of do about this? Social media following is very important. So the likes of Livia's did this really, really well. How you connect with your consumers. If you've got a strong community that you can tap into there already, then it's brilliant for crowdfunding, because you can go up being like, look, do you want to kind of join us on this journey? You can put in as little as £10, and you should kind of tap up all of the different means of doing that. I would say if you haven't, or you're not trying to build a community, I would say start doing this. It's just imperative when you're running a consumer brand at the moment. So yeah, start building it out. If you're not sure how to do that, reach out and ask for support from people, because it is really key when you're building a consumer brand. The 3 things that we say to do to appeal to a Seedrs investor. So this is why I'm talking about the Seedrs, our network on our platform. We say to tap into people's heads, hearts, and make sure you excite them. So what I mean by that is when you're actually running a campaign, you want to be able to kind of tap into the mindsets of people. So that's things like your valuation, your financial model, your pitch, your video, all that kind of stuff. Is that appealing to an investor's kind of mindset in terms of their business profile and what you're looking to do there? The heart is about you know, that's maybe your founder's story, your business story. Is there kind of like an ESG element to it, or is there a certain thing that's going to really appeal to their hearts? Is it going to kind of, they think, oh, you know, this person's somebody that I'd like to invest in, and this business is something I relate to. That's quite important to kind of pull out. And then the final one is excitement. You know, it's about building of excitement. They, you know, investors want to be investing in the next big thing. They want to be investing in the next Uber or the next Airbnb. So how do you play into that? What's really exciting about your business? What's really unique about it that's going to really catch the attention of investor? Nail all those three things, you'll get investors on board, and that's a kind of real trick to it. In terms of why is crowdfunding good for F&B brands? You know, first off, it's, you know, fresh capital injection. I know, I'm sure Zoe knows from running your own business, especially in F&B, there's just a constant need for capital to kind of grow quickly. So, you know, if you're a bit of a later stage business and you do have, you know, lead investment or VC investment or whatever it is, it's a really great way to kind of top that up and, you know, get capital from your customers and getting really new passionate investors on board. This one's really, really key. It's you know, an army of super referrers. So, you know, if you're building a community of enthusiasts and, you know, super users who can be used as advocates, investors to fuel future growth, that's amazing. You know, these people are there to be able to kind of tap into, you know, if you're launching a new supermarket, you can reach out to that database and be like, hey guys, we've, you know, just launched, go pick up a thing, help us out, post about it, repost about it. You know, these are your network, your community. You know, this is something that Brewdog, when I was there, they did really, really well. You know, they built their business on their, you know, their investors and their community and how they got them on board. So it can be a really fantastic way to do it. And it just expands your tribe. You know, it taps into our investor network. You know, you're getting access to, you know, hundreds of thousands of investors, like I mentioned, that are interested in the F&B space. So it's a great way to get your business out there, especially if you're raising investment. So the what's and what not to do in a crowdfund with Zoe. Really keen, essentially, Zoe, to hear your story from kind of start to finish around, you know, what was it that that brought you to want to do a crowdfund in the first place, over raising in other ways, and then, you know, what was your journey like, essentially going through Seedrs? I'd be really keen to hear it.
Amazing. Yeah, so like I mentioned, when I started the business, it was on a shoestring. I used a government startup loan, which is a really great early fundraising option for super new businesses. You know, you can get up to £50,000 through Virgin Startup or £25,000 through a government-backed startup loan program, which is great. So it's super helpful to kind of build momentum and get that product out of conception into kind of testing phase and get it out to customers. So I did that. I launched the product, and then quite quickly afterwards, I was thinking, I'm going to need to raise some money. So I don't come from a finance background. I didn't go to a posh school, so I don't know lots of people who've got hundreds of thousands of pounds to give me straight off the back. So I thought, let's prove the concept, let's get the product out into the market, and then hopefully we can build some traction around that. And then I'm going to find all these investors with hundreds of thousands of pounds that are just going to, these angels are going to come down from heaven and just give me loads of money. So they're there. They're there somewhere, apparently, riding around on unicorns. But so I started the business. It went well. Sales were going good. People were loving the product. So I thought, right, okay, I've got something good. So I started properly kind of looking into fundraising, I'd say halfway through 2021. We launched to market by the time we'd kind of done the R&D and gone through all of that. We launched November 2020. So kind of halfway through the following year, I started to think about, I want to find these angels, and I'd love to bring someone on board, ideally some smart investment people who have got F&B backgrounds and can kind of contribute to my business. And I think that's really beneficial as well when you're starting, if you can bring in investors that have come from similar backgrounds or backgrounds of skill sets that you're lacking. So maybe you're not great on the finances, maybe you don't have a CFO yet, so, you know, maybe look for investors that have that kind of experience. So that was the kind of beginning of my journey, and it was a lot harder than I thought. So I joined lots of angel investment networks. I did loads of online pitches. I kind of put stuff out on LinkedIn. I worked to all the networks that I could do. Bear in mind, we'd had like, you know, a year of no physical networking, a lot of events, a lot of startup stuff, a lot of places where you get to talk to, you know, people in business, investors, brands, all of that, you know, hadn't existed. I'd launched a product really D2C, so I hadn't been kind of networking with buyers and in the industry because everything was shut down. So it was a bit of a weird position to be in. I was just kind of living on LinkedIn and trying to kind of build my professional network through LinkedIn and online networking and pitches and stuff. And I just really struggled. I found it really hard to find the amount of money that I needed. So I had in my head I wanted to raise 300,000, and that kind of figure came from looking at what other challenger brands similar to me were doing in the alcohol-free space, what they'd raised early on, where they were now at that point. And I thought, okay, that was quite a good amount to look for. And I met some really great investors. I met some people who were super passionate about my brand, really passionate about what I was doing, but probably due to the economic climate, probably due to the fact that no and low is a fast growing but small category. You know, we don't have lots of data showing like cold brew, for example, or kombucha even, you know, we don't have, or regular craft beer, we don't have years and years of, we do slightly now, but we didn't then have years and years of data that people could see the traction of how a brand would grow and see how the market would grow.
At the beginning of Fitch, it was the same thing. Yeah,
so when you're, you know, cold brew coffee again, you know, people were like, is it cold coffee in a can? Like they didn't quite get it. And it's like, you know, you're trying to kind of explain a brand, explain a product. You know that you're going into a really exciting market. We've seen how these markets are growing in other countries like the US, for example, but it's just, investors need that reassurance that, you know, that they're going to be part of something that's not just a fad.
exactly.
So that was quite difficult, but I had found some really great people that wanted to put in small amounts, 15, 20 grand, 30 grand, and actually come on board and help me from a advisory point of view. So I brought on an amazing couple who came on board with some funds and also came on board as an advisory CFO. So Kim was one of my first investors. She's amazing. Her and her husband Darren have been so supportive since the beginning, and she still now kind of helps me on a financial point of view. She helped build out a lot of my modeling for Seedrs, which we'll talk about the kind of prep stage in a bit, and that was super helpful. But still, it was, you know, it was not the full ticket that I needed. And then bringing them on board, brought some other people on board, but it still wasn't that big kind of chunk of cash that I needed. And anyone who's starting a business knows how you burn through 30k like that. I mean, that's just one brew. Or you know, it's, you know, your burn rate is super high when you're starting out. You've got to invest loads in marketing, lots in production, lots in sampling. So you need to have that good chunk of working capital. And so towards the end of the year, I was thinking, you know, I need more funding. You know, the cash runway is running out, and I'm not going to be able to, even though sales were kind of coming in quite well, they weren't like millions of pounds. So, you know, you're kind of like, you end up just treading water. And I think the first 18 months of a brand's inception and launch is really crucial, because you've got that momentum, you've got the PR behind it, you've got new release PR, you've got people talking about it. If you start treading water into your second year, going into your third year, you lose that momentum, and it's really hard. So I think if you're looking to raise your first bit of cash, like, do it within the first 2 years, 100%. Even if your sales are quite good.
We always say raise from a position of strength, and that can be, you know, on the back of momentum. That can be the fact that you've got some new listings kind of coming in. That can be that you've got cash in the bank at the moment. Try not to like do it when you're, you know, running out of money, that you just need it in to kind of keep your run rate going and all of that kind of stuff, because that doesn't look that appealing to investors. Investors really like it when you raise from a position of strength. So do bear that in mind. Always raise sooner than you think that you need it.
If you're sitting here now thinking, oh, I'm going to start raising spring next year, start raising now. Crowdfunding, you know, and we'll talk about this later. There's a lot of due diligence, there's a lot of building your community, and a lot of back end stuff that needs to be done before your shiny, beautiful video goes live on the platform. There's a lot to do. I think people just I underestimated the amount of stuff that you needed to do before. So yeah, whatever type of fundraising you're looking for, always go at least 6 months before you've thought, oh, I might need it then. And yeah, you're right, it puts you in a position of strength, and you also make better decisions. You know, you may be offered money from someone who isn't that suitable. Maybe you don't have a great relationship with them. Maybe they are going to demand too much from your business, but you may be forced in desperation thinking, I'm running out of money, so I'm going to have to take this money. So like anything in life, like if you're in a bit of a desperate situation, you don't always make the best decisions. So yeah, getting that momentum. So I knew that we had to bring this fundraiser, this first kind of seed raise together quite quickly. And to be honest, I'd been hesitant about crowdfunding for a few reasons. One, because I felt I wanted to get that one or two core investors. They were going to be, you know, no and low specialists or F&B specialists, and we were going to work together, and they were going to become part of my board. Great, and they're going to shove in a couple of £100,000 each. Yeah, that dream just didn't happen. Yeah, the reality of that was like, okay, that's not now going to happen. I knew that there's a lot of work to be done around Seedrs, and that's not because I was work shy, but because I'm a solo founder with no staff trying to run and scale a business. I thought, oh God, that's so much work for me to do. I don't know if I can, like, where's the headspace for that? So that kind of was a little bit of a concern as well. And
I mean, raising finance, like, generally, I find it's like a full-time job. Like, it really is so intense, no matter which way you do it, no matter if it's crowdfunding, institutional, even just friends and family. Like, it's a really intense process, and I think it's always really underestimated until you've been through it, or until you're going through it. Because I think when you start a business, you naively think, you know, especially if you're getting good feedback about your product or what you do,
everyone's gonna
then you're like, oh, everyone's gonna want to invest in me, everyone's gonna give me loads of cash, and it's gonna be really easy. But in reality, it's actually not. There's a lot more to it. I was similar to you. I underestimated the kind of due diligence side of stuff. When I first started doing my crowdfund, I didn't have anything in place. I don't think we had like a full financial model, or you know, I had no idea about how to create the right valuation, or, you know, like what I was going after. It was completely stab in the dark stuff. And you learn that over time, and the more you kind of do raises and stuff, that you figure that out. But I would say if you are raising for the first time, or looking to raise for the first time, and you're not sure about everything, you know, reach out to people that have done it. You know, find their words of wisdom, because there's a lot of pitfalls, or a lot of things that I think that might come at you that you don't expect, that is useful to know from people that have been through
it. Yeah, definitely. And I think our culture is moving in a really interesting way now. Where before there was a lot of, and I think, you know, women are a bit better at this than guys, but there's a lot of bravado. It's like, yeah, I raised £200,000, it's really easy. And you talk to some people, you see brands, and maybe it's because they don't want to give away their secrets or how they've done stuff. But I found in the no and low community, it's quite a small market, so people are very open, and people are very open about sharing. But, you know, at the start I was like, oh God, it seemed really easy. Like, they raised that much money, and they raised that much money. All you see maybe is if they've gone privately, it's like that announcement on LinkedIn, you know, that we've just closed our first fundraising round. And you think, oh God,
yeah, we just raised 2 million, and it looks like they just did it like yesterday, started it yesterday, and they just closed 2 million. You're like, oh, okay.
Right.
I would put money on the fact that it was not that easy.
Yeah, and there was probably a lot of tears and stress, and, you know, doing through first. And I think that's what we need to do in business, especially, you know, startups. You know, we need to talk about it, and we need to be honest and be like, yeah, it's a really hard process. And there was also the fear for me, like, my business is going well, people love my product, I'm going to do a really public raise, I'm going to be on LinkedIn hounding people every day, telling them what I'm doing, telling them how amazing my business is. And then what if I don't raise the money? Like, mortifying. It's going to be so embarrassing, and I'll be like, oh my God, like, ugh. So that was a bit of a fear for me. But
it's funny that you say that as well, because I had that fear exactly the same. And then you do, as an individual, you don't want to, you don't want failure. I hate the word failure, because I think it's all just learnings anyway, but you don't want to be seen as not succeeding at what you're doing in a very public environment. But it's funny, because I see people not hitting target, and I don't think twice about it. If it's not you, you don't put an eyelid to it. You're just like, oh, that's a shame, but they're going to go on to like try other stuff, and it's just part of the process. You some things you do well, some things don't work out. Like, it's just part of the journey. But you're absolutely right. That was a huge fear for me as well. I was like, oh my God, it's such a public facing way to raise money. Like, everything's going to be out on the table. What if I make a complete tit of myself, essentially? But people are more supportive than you think, I think.
Yeah, definitely. And because you speak to investors and they say, I don't want to invest, or I'm not interested. And so you've had that bit of rejection, but it's private. So you can just be like,
no one needs to know about that one.
So yeah, there is that fear, but I think that, like most things that are public in the social sphere, no one cares. No one cares, actually.
Yeah, they're like, in fact, I found that it's the opposite, that people, I wouldn't say that people don't care, but people don't care that you haven't succeeded, but people care that they want to help you succeed. Yeah. I find that, surround yourself with awesome people. They're just going to want to help you succeed, and they'll help you find other ways of doing it. So I'm a massive believer and a massive fan of people sharing not just their successes, but actually just more sharing the things that have gone wrong. Because I find if I do that, especially on LinkedIn, people come in and be like, oh, how can I help? Like, what can I do? So like asking for help, man, it's just great.
Definitely. And sharing your failures and your shortcomings and things that have gone wrong really helps kind of make a healthier culture away from this like hustle culture, away from this like everything's amazing, because people obviously put their achievements more on social media because that's what we do, and it's great to share stuff, and it's a good little boost for your ego, even though you're like a little duck floating on a pond, but underneath you like that, like help, what's going on? But no, it's great. And it's great when people say, yeah, this went really wrong, or this didn't work, because you go, oh my God, thank God. Or I've got literally no money, but I make it sound like there's loads of money, and stuff that we all do to kind of put our businesses looking best foot forward. But it's great, and it's reassuring when you talk to other people that they say, oh no, this happened, this didn't work. So I got over those fears and went, okay, do you know what, I've got quite a few investors now who want to put in smaller amounts, between like 30 and under, but I need to corral them together. And the reason why I chose Seedrs is because one, the profile of brands that Seedrs have been promoting were really, really great. They were challenger brands. They were like cool brands. They're brands that like I resonated with. And it was for larger amounts. So there are some great crowdfunding platforms out there, and they do equity crowdfunding and also rewards crowdfunding. But I wanted to be somewhere where these investors were serious. So, brands were going for 100K plus, investors were really committed, and it seems like the investors on the Seedrs platform are really active as well. So for me, I was like, okay, this could be a great way to bring together all these investors. And one thing I think people do need to be mindful of, it's not just, oh yeah, crowdfunding, you just go on there and then people give you loads of money. Like you said, there's this 3 kind of tranche approach of pools of people that you need to contact. So, you've got to have a viable business and a viable product, and you've got to have that passion, and you've got to build out the models, and you've got to do your valuation. And if you have all of that, which any business in order to move forward would need to have it anyway, then you can reach out to these pools of your cornerstone investors, that people that are going to come and kind of really support you in your private raise before you go live on a crowdfunding and on Seedrs platform. So I had those guys, and they were like, well, I'll put 10 grand in, but I want to wait till this person does it. So it was brilliant to say, we're going on Seedrs, this is the platform, it's so recognized, it's a trusted brand, all the due diligence is done, which takes 8 years, but once it's done once, rather than each investor you speak to, you have to do the due diligence again. And that's what is so time consuming with raising investment privately. With Seedrs, you do it once, and then they know that it's all been vetted. They know that anything you're saying on the platform, anything you're saying in your materials is truth. There's you have to research and prove every statement you make, every stat that you produce, which seems like a real ball ache at the beginning, but actually it's great, because one, you really get to validate the things that you say all the time. You're like, where did I find that figure from? I can't remember now. Or where was that stat from? But so it causes you to really analyze your business like in an in-depth level, and really causes you to kind of double research, because you do it when you start your business, but then once you're in in the melee of every day running a business, you know, you don't do the market research that you did at the start. So it actually helps you to kind of refresh on some of that, look at the markets again. And so we kind of built all that together. And then looking at our customers, you know, we have quite good customer retention rates online. You know, we're building our little community around people that are focused on healthier living, no and low, more mindful drinking, more conscious consumerism. And so we reached out to our customers, and there was a great response from them. You know, people were really supportive, and lots of smaller ticket investment, which don't underestimate, you know, how quickly 10, 20, 30 quid build up, you know. You can have hundreds of investors that finally close your round on the platform, and, you know, 10, 20, 30, 40, even plus can be made up of people putting in small amounts. So
exactly.
And that's amazing, because, you know, they're not getting equity out of it. They're just doing it because they care about your brand. So again, it's a really nice reassurance. It's a really nice way to kind of connect with your customers as well.
Absolutely. And when I found that, especially like in times that get a little bit challenging, whether that be, you know, COVID, or, you know, what the word recession's been battered around a little bit at the moment, I find that actually something like a crowdfund is really great, because I think especially in the UK, we tend to rally around the underdog a lot. So we really want to see people succeed, especially if the odds are stacked against them. So I think that especially in times that are a little bit more challenging, if you do something like a crowdfund, you find that people come out of the woodworks being like, oh yeah, like I totally get it. It's a really difficult time. I'm going to chuck in a 10 or 20 quid because I really want to see this founder succeed, and I want to help this business out. We're all for the underdog in the UK, so we're all about the small businesses and challenging the corporates.
Yeah, it was amazing, and so that was a really nice early kind of indication that, okay, this is going to be really good. And so in terms of the, you know, you don't just go onto the platform and then you raise loads of money. You do have to do lots of stuff before. So it's really important that if you're thinking about doing a raise, that you start to, you know, are you engaging with your community? You know, are you active on your socials? If you're doing, you know, if you have a database, you regularly send newsletters to your customers. And it's things to think about from the beginning, because you don't just want to suddenly start emailing your customers being like, we're raising money. Like, are you already talking to them regularly? Do you already have nice communication with them? You should be anyway, but if you're not, you know, start thinking about, okay, well, maybe I need to start sending out a bi-monthly or monthly newsletter for the, you know, leading up to my raise. Maybe I need to start building that engagement with customers. You know, is there another way that I can be kind of with permission getting more people's emails, and, you know, building up my database. And so the work that we started doing early on, like I said, I brought on an amazing investor who acts as an advisory CFO. So she was amazing building up the financial models, because I don't come from a finance background. It's the bit that is, you know, one of the most important bits of your business, but interests me the least. As long as the numbers look good and I've got a sheet to review, but do I want to build out that spreadsheet? No, I don't. I've got other things to do. So she was amazing and helped us build our modeling. And again, that was a really beneficial exercise to do. And many people said, well, you should be doing that all the time anyway. But let's be honest, you know, you do it at the beginning, and then you're in it, you're every day getting sales, looking after customers, making profits. And so you're not doing that all the time, really, unless one of your partners is a finance person. And so we started building out the modeling, looking at our projections, looking at what our revenue streams were going to be for the next, you know, 5 years, I think we did in the end. And that was a really great exercise, and something that caused me to think about where I wanted to take the business, what avenues I wanted to go into, which were kind of our strongest performing avenues so far. And it was a really great way to kind of deeper dive into the business. So started doing all that back work, and then I think we reached out to Seedrs and started the process just before Christmas, probably November time, and then started doing all the due diligence and create the collation. And again, that's something that seems quite long and laborious, and you're like, oh, when am I going to fit that in? But you do manage to fit it in, and like I said, once it's done, you don't have to do that back end due diligence with any of your investors. You know, people will always ask questions, and that's a great thing about the Seedrs platform, is you do have that kind of open facility where people who are logged onto who are registered with Seedrs and who've kind of gauged interest in your raise, you know, there is a platform so people can ask you questions back and forth, and people will ask for more in-depth information, of course, but you know, they're not asking for all of that information up front, like when you're just cold working with an investor from the beginning. So that
how long take you, Zoe, from start to finish? Like, how long, when you had the initial conversation with Seedrs to money in bank, how long was it?
So the final bit, which I will go into, took way longer than I thought. Like the final closing of the round to getting the cash in bank probably took about the same amount of time as doing all the pre-work, so which was about 6 weeks. It's not always that slow. There were just other complications. I brought in investors who were not based in Europe, so there's extra. Great that you can count them as part of the raise. Seedrs allow that to happen, but it means that I have other paperwork and stuff that needs to be sorted out simultaneously with different time zones and different people. So it extended the time frame certainly a bit at the end. But yeah, it was about 6 weeks for us to launch privately, and then we had a couple of weeks private. So that basically means, people don't know, that you have your Seedrs profile set up, it's all been approved, and then you can open up to your private community. So your cornerstone investors that were interested in confirmed kind of putting money in at the beginning, and then your personal community of friends and family and your customers. And that just gives people a chance, especially if you're utilizing SCIS and EIS, which any small business should really look into. It's an amazing tax break that means that investors can get between 50 and 30% off tax back, essentially, from when they invest in your business. It's a really great carrot to dangle. There are other tax breaks in Europe and the States and stuff, but I think SCIS is probably one of the best globally, actually, because it really does support investors. Someone puts in 50 grand, actually they're getting 25 grand back off their tax, which is amazing.
You do your SCIS application yourself, or did you get someone to do it?
No, I did it myself, and I did it pretty much when I launched the business and got SCIS advanced assurance, which again is a really great thing to have. So you basically say to you apply to do it. Now, when I applied to do it, it was the last cutoff when you didn't need to have investors. I think now you need to show that you've got potential investors in order to get.
You need a lead investor at a certain
amount.
Yeah.
Early days, you didn't have that. But when I brought in my first investors, that was kind of April 2021. I managed to, I had the advanced insurance on that as well, which again is a great thing to have. So we sorted all of that out, and then we were there for 2 weeks on the private phase. So that meant that people who I talked to and said, right, I want to put 10 grand and let me know, it means that they can get, because SCIS it's first come first serve, so you have 150 as the first break, and then whoever signs up first onto the platform, they'll get that tax break. So and then we launched kind of officially onto the platform. I can't remember what it was now. I think it was kind of March time maybe, that we actually launched in the end, maybe February, March. But the early process was challenging. I think I saw a question pop up about valuation.
I was going to say a couple of questions in here, which we'll ask. One, valuation. How essentially did you come up with the right valuation of your business at the pre-investment stage?
So it's really difficult when you're starting. Also, this is why, and it's another good reason to try and fundraise early on in your business journey, because the further along you are, the more data you have, and the more realistic, not your valuation, but the more realistic your kind of, so it could be harder. If you go early on, people are believing in you, your passion, and projections, which are essentially your hope that you're going to hit these targets in the future, using the research of the market, other projected growth from other brands, the share of the market that's available, but it still very much is guesswork early on.
I would say some investors are after set traction and knowing, that your valuation's based on like your previous revenue, or brand, all that kind of stuff. Some are happy to look at projected stuff, and it's more about the founder, the team, the product, all that kind of stuff. So I think it depends. It's very dependent on the investor.
It is definitely, some investors want to be more risk averse and they want to see that there's that traction. But when you're fundraising early on and you have super low revenues and lots of money going out and not much money coming in, your valuation would be terrible. And actually it wouldn't be, if you calculated it in that way, it wouldn't be a true reflection of the potential of your brand. So the way I did it was looking at the potential, like the market share of alcohol-free beer and how that was growing. I looked at other alcohol-free brands, and what they'd done early on. Some of them now are quite big, but 2 and a bit years ago they were still on their real kind of growth trajectory. They'd just done their first raises, so looking at the potential of how they'd been received and looking what their early valuations were. So I kind of took that into account, and also taking into account the markets that we have potential reach. And so we're not just in no and low, we're in functional drinks and we're in health and wellness as well. And then looking at what that looks like globally. So this isn't a niche market to the UK. Functional drinks and health and wellness is health and wellness in adult occasion drinking is a huge growing category in the US and Canada and Australia. So you kind of look at all these together, you look at the bigger picture, and then you look at your brand and where that sits. And so we came up with like a 1.1, I think it was around 1.1 valuation, which is not, seems a lot of money, but actually it's not crazy, but it's kind of it's positive, and it's looking forward at the potential that the brand and the business could achieve without being egregious and being ridiculous and unachievable. You don't want to put
I would definitely say that's one of my what nots to do, especially kind of pre-seed seed. What you don't want to do is shoot yourself in the foot for future rounds. So you don't want to go in at super high valuation now, just to then, when you end up wanting to go potentially institutional, your VCs for larger rounds, then your valuation either not really moving or coming down from what it is, because you maybe haven't had that traction that you expected or projected when you were kind of very early stage. So you don't want to shoot yourself in the foot so that you don't have that business growth and valuation growth. So be conscious of that, I think, when you are setting valuation early days.
Definitely. And equally, you don't want to set it too low so you're giving away too much of your business, because you want to have
exactly. It's a real fine balance.
Yeah, that good potential for what your valuation is. You want to make sure you've got enough equity left when you go for a bigger raise. You have to think about, it's very easy, I guess, early on to be like, oh yeah, I don't mind giving away 40% of my company, it's fine. But you have to think, okay, what's my fundraising? What's my journey going to look like over the next 5 years? Because if I give away 40% now, there's going to be nothing left further on, and you're going to give away a lot for a low valuation, and it's not going to work for you. So there is a bit of future planning of where you want the brand to go, and also looking at your raises that you're going to need to do. Already I'm thinking about what the next raise is going to be, how that's going to look, because you really have to plan, because one, you burn through cash super quickly. We managed to raise just over almost 170,000 at the end of the platform, and we wanted to go for 150, which was great. So we raised a little bit over, and you get lots of people saying, oh, you should really go for more, or why aren't you raising more? Those people go, oh, it's a bit too much, or it's a bit too little. People will always have their different opinions, and it would have been great to try and raise 300,000, but equally you want to be realistic. You want to make sure you hit your target, and it's better to have, I think, if you can't achieve that level, the 300, 500,000 early on, go for less, have a really structured approach to how you're going to spend that money, and be like, how is this going to push forward my revenues, show growth, achieve key KPIs that I've set out to grow my business? Because then even if you've only got a little bit of growth, you've had the investment, you've shown that you can use it wisely, you've turned it into growth, you've turned it into development of your brand, then someone's going to go, oh, actually, now we will talk about giving you more money. So it doesn't matter. Don't feel bad, I think, if you go, oh, I really wanted to get 500,000 and I've only got 150 or 200,000. That doesn't matter. It's you can do, I did so much with no money. So I was like, imagine what I can do with a little bit
less. Yeah, you have to be a bit more creative.
Yeah, you're more creative, and you reach out to more contacts, and you hustle more, and you kind of work with other challenger brands, you do collaborations. And sometimes I think, you see this a lot in tech companies, that they raise an astronomical amount of money at the start and it just disappears. I think sometimes if you really have if you have smaller amounts at the start, you can really kind of set those solid foundations, and then future investors will look at that and go, okay, well, they did raise money, doesn't matter what it was, they managed to raise 50, 100, 150. They had people that believed in their business, they took that money, they used it wisely, they've got some growth. So that, as long as it's going in that traction, and like you said, you can always, sometimes when you have too much money, you can waste it. You're like, oh, I'm just going to blow 50 grand on
I've got more in the bank, it's fine.
And then you're like, did I really need to do that? Could I, if I had less money, I maybe would have done it cleverly, or more cleverly. That's even a way of saying that. Yeah, and you would have definitely looked different. So I think, yeah, there's benefits to raising smaller amounts, being more cautious with your valuation, and actually thinking, how much do I really need, and also really be clear on how much you feel like you can give away, because it's a long game that you're playing. So don't give it all away at the beginning.
I'm conscious of time, conscious we're kind of running at the end. I actually think we've gone a little bit over. Just chatting away, having a casual chat. I guess last question. I know there's a couple more questions, and what we'll do is I'll try and do a little kind of follow up, and Chloe can send that out with any questions that we've not answered. I guess my final question to you is, what is your like number one what to do, and what is your number one what not to do when you're raising via crowdfunding?
What to do, definitely start thinking about it way earlier. And so, if you're thinking about doing it now, then start, looking at your community, looking how you communicate with your stakeholders, if you haven't already, your customers, your trade accounts, who's buying your product. Look at how you're talking about your brand online. Are you active on LinkedIn? And you were actually my inspiration for this. Emily was like the queen of LinkedIn when she was launching Fitch. Every 5 minutes she was posting something, and it was annoying, but actually it really worked. So I was like, be more like Emily. So yeah, I've actually chilled out over the last couple of months on LinkedIn, but yeah, I was pretty active, getting involved, commenting, sharing articles, sharing stuff about my industry, and it really worked. So LinkedIn was a really great asset. So make sure you're building that community out.
And then every single person that you meet is a potential investor, in my opinion, even if that's just 10 minutes. Every single person. And don't feel embarrassed about it. I always just like, I'm never bothered if somebody asks me for money, even if I can't like input. But I think like sometimes we have fear of being annoying, or like just asking for people for stuff all the time. But no one bats an eyelid to it. Just hustle.
Definitely, and that's what business is about. I'd say 70% of my investors, the cornerstone and the ones before Seedrs, all came from LinkedIn. Because that, again, at the time we were in, that was your networking, that was your brand events, your business events. That LinkedIn was everything. Just like you might have a chat with someone when you're at a networking event and you're like, oh yeah, I'm raising money. Yeah, you're having that same conversation, but it feels a bit weird because maybe you're just kind of cold reaching out to them. But yeah, utilize LinkedIn, utilize your communities, and start to make sure you're building that anyway, but especially if you're thinking about going to the crowd. And then what not to do, I would say, what not to do. I would say don't underestimate the amount of time that you need to schedule in to make it work. So once you've done all the due diligence and that, that's not just sitting down scrolling through, your notes and your figures and your researching and articles and research. But once you've done that, make sure you're carving out time in your day to respond to questions that come through on your platform, on your page, respond to investors when they are asking questions, but also to keep doing updates as well, and keep telling people this is happening, that's happening. And it might feel like annoying that you're doing it every day, but this is why they've signed up to your platform. This is why they've signed up and shown interest in your raise. So don't just ignore that, and don't just think I'm being annoying, or I don't want to handle little, like, drip feed it. And also, a lot of the investors that come through and express interest on your Seedrs platform, many of them won't know your business. So think about things that you've been talking about before, like why you started your brand and why your product's unique, and maybe the first awards you won or some of the first accounts. You might think, I've already talked to people about this, I've already put something on LinkedIn, I've already put something in a newsletter. But a lot of these people won't have heard it, and if they have, they've probably forgotten, because they're seeing brand communications all the time. So again, that was a nice way to look back and go, God, yeah, we've done quite a lot of stuff actually. So don't underestimate the time that you need to dedicate to it. Carve it out in your day. If that means you have to get someone to help do your admin, if it means that you kind of are a bit more structured in your day, because we all know you can open your inbox with 100 emails and you're just going through them the day and you don't actually do anything tangible. So kind of carve out some time in your day to be a bit strict like that. It's not going to last forever. It's not going to be something that goes on for 6 months. It will be over in a couple of months. So just make sure you carve out that time to do it.
I remember like launching our campaign and I was just like relentlessly typing and I was like, oh my God, I didn't realize it was going to be like this intense. And I was, it was just like, I was like sending my deck to people, answering questions, just having phone calls with people. And I was like, oh my God, I didn't realize it was going to be like so intense. It was great. And I learned loads about the journey of investing and stuff by doing it. But yeah, definitely don't underestimate the time it takes to raise money in general, I would say.
Yeah. And I think it's a really great exercise. And actually, I feel I know my business so much better now. It's almost like you have to like almost rewrite your business plan again, you know, because you're going over your financials, you're putting together a deck, and you know, you're pulling out stuff and talking about your brand and talking about your achievements and talking about your listings and talking about where you want to go in the future. And it's been a really great exercise to do like 18 months into launching the business. And yeah, it's made some really great connections. So people have found me on Seedrs, whether that be investors that have come from, you know, different places, whether that be new funding opportunities that have come up, whether that's new, I got a couple of listings for someone who's like, oh, I saw you on Seedrs, I own a pub, you know, so there's loads of different potential that comes up. So yeah, don't underestimate the kind of the afterglow of doing the raise as well. And the
capitalize on that massively. Yeah. Like once you've got money in the bank, that's when all the investors come out of the woodwork wanting to invest. Amazing. Well, I think we're at time now, but I really wanted to say a massive thank you for Zoe for joining us. I'm going to pass back to Chloe just to kind of finish us out. But thank you to everybody. If there has been any other questions asked, we'll try and do a little round robin, and so Chloe can send out a little email to everybody. But if you do want to, I think Chloe put our LinkedIn connections. If you haven't connected, please do connect with us. Ask us any questions. People feel free to email me. If you're wanting a like absolutely free, no obligation chat with someone in the Seedrs team, do reach out to us. We can kind of chat you through the process a little bit more. If you're interested in hearing a bit more about it, we can have a really honest, open chat about what it's like to do around. So thank you all so much for joining us. Hope you found it useful. I loved hearing Zoe's journey. I hope you guys did too. And yeah, pass you back over to Chloe.
Guys, thanks.
Thank you so much both. So many lovely comments in the comment section just saying how real, open and raw the conversation's been. So thank you so much for that and for joining us today. Thank you to everyone that joined us virtually as well through the screen. The session has been recorded and will be sent out to all attendees later on this afternoon. But thank you all for joining us and have a great rest of your day.